other things?
So the third thing, I would say that third is understanding how you can go into a negotiation, how quickly you could or couldn't close. So it almost lines up with, okay, now that you know your credit score and now you kind of know the game plan for down payment, it's now how do I actually do this? How does it line up? So if it's let's say it's a buyer who rents. A lot of times in their mind, well, my lease ends in June, so I don't want to like do this until May 1. And I'm like, no, start looking now. It's April 1 because the perfect house could line up. We could negotiate 4 different things and you might close on May 30th. Who cares if you have an extra month of rent?
Well,
because your mortgage payment doesn't start,
Yeah. Mortgage payments in arrears, whereas rent is for the month coming up.
Right.
And
but,
so,
but it goes back to execution. So I think once you know credit score and you know your financial down payment game plan, it's then like, how do we execute this? Because I find that certain people halfway through that they've already executed, they're like, man, this wasn't as bad as I thought. Like, this was easier. So everybody gets this almost like stage fright, like you're going up to this high dive and you've got to dive off and it has to be perfect.
But it all comes back to what we said earlier, which is having the right team.
Yeah, so having the counsel.
The whole home buying process or home selling process can be extremely stressful.
Sure.
And because people don't do it every day or every week or every year even, it's going to be more stressful than it otherwise would, but having the right team will totally minimize that stress and make it a much easier process, much better feeling,
right?
Easier to the closing table, get to the finish line, and ultimately move into the house that you wanted.
Right. It's definitely, what I found is it's definitely an emotional experience selling or buying. It depends on what's important to the client, and then it depends, like you said, on the experience that you have to like pick up on those signals and say, hey, it seems like this is bothering you or whatever. And then, and that's not to say that someone with 1 year's experience selling real estate or 1 year doing loans, like can't help people. It's just, to me, I remember how little I knew 12 to 24 to 36 months in versus now. Not saying I'm like the old wise guy that knows everything, but there's just the ability to kind of advise people or say, hey,
learn from your mistakes.
I don't think you're ready to sell based on this interview. Or, hey, right now, based on what you said, I think you should wait a year. The more
you should do this or that.
The more experience you have, the more knowledge you have, the more ability. I think you can tell people not what they want to hear, but maybe what they need to hear. So,
yeah, one of those deals. I tell people all the time things that they need to hear, not necessarily what they want to hear, but that's not why they're hiring me.
I went to a conference. There was a guy, pretty sharp mortgage forecaster, and he talked about this COA, cost of waiting analysis. And so I bought his software. I'm starting to use this, and it's interesting. What do you hear about, like, because I hear people saying, hey, I'm just going to wait till this market crashes.
Yeah.
Do you hear that?
All the time, every day. And so one of the things that I would say on that is, first of all, you can't time the market. You can't time interest rates. You can't. There are people out there that try to time all of it, and if you do time it, you just got lucky. I think a lot of people, you just can't time it. But a big piece with that is, I look at it and go, all right, if Alliance Bernstein has 5,000 jobs, Amazon has 5,000 jobs, Ernst & Young has 400 jobs, Apple Music is building out in Wedgwood, Houston.
Growth, yeah.
Plus the average of 82, 85 people a day for the last 4 or 5, 6 years, whatever it's been. How does the market change?
Right.
And I'd say 50% of those people that are moving to Middle Tennessee probably want to be in Nashville, and the other 50% are probably going somewhere in the suburbs, Williamson County, Sumner County, Wilson County. Yeah. And so I look at that and go, how does it slow down? How does the market get better all of a sudden? The new construction can't even keep up with.
Right. I mean, this is what this guy Barry said, and he showed like a forecast of when you have. He broke it down into 3 parts, and he said we're heading into a recession, based on the fact that the 10-year Treasury and the 2-year are inverted.
Yeah.
So, and he explained for about 5 minutes, God, like what's tied to those, and it was like, wow, if you lent your money to the government for 10 years, they'll pay you less. than if you gave it to them for 2. That doesn't make sense. You should get a higher rate. So the other thing was unemployment at historic lows, meaning there's so many people that have jobs. And then he talked about like inflation and pricing. So in every major recession, in the major markets, house prices went up.
Yeah.
And so this is what everybody's going to say down. And it was, the curve wasn't like that kind of up. It was like a flat. So he said, this is what happens in a recession. Rates drop.
Yeah.
When rates drop a full percentage point, people can afford more.
About 10% more.
Yeah, which keeps pressure upwards.
Sure.
So when we're in a recession, people lose jobs. Okay? When people lose jobs,
they can't afford their house.
Well, or yes. And when people lose jobs, technically, what was the factor on that? You have increasing unemployment. Oh, when people lose jobs, housing starts slow down. Mm-hmm. So when you have less new construction,
so housing starts are new permits being pulled for new construction.
Right. So starts go down. So then what happens to inventory? It compresses. So he started the whole thing saying supply and demand. When you have more demand than you have supply, prices go up.